and the Bank Nifty is about 0.21% higher in trade. We still have the indices doing very well for themselves, courtesy select band of indices like autos, for example, which are really powering ahead, and a few others which are helping the index stay much better. The mid caps and the small caps, which had started off very well and traded at a premium at the start of the trading day, have cooled off a little bit. Mid caps in particular, the small cap index was up and about, and that too has come off a little bit, which is why I think the market breadth, just before we get the heat map up, if we can get the advanced decline ratio up on the screen, we'll see a little bit of that convergence. We started off really well at the start of the trading day, much strong market breadth. I think it's come off and now in favor of the decliners. But pull up the heat map and show you what's moving and what's not. A lot of green on the index, at least, courtesy autos. Eicher, Maruti, M&M, just a standout move that is coming into the auto names in the session today. Select financials are doing well. Reliance is doing well. And typically when Reliance is up 2%, it puts its hands up. So a bit of a shift happening, right? Last week it was all about HDFC Bank. Today it's all about Reliance and some of the autos which are doing well, and not too many losers. 2 days on a trot now. Adani Ports has had some issue, but Nestle, that royalty thing hurting the stock, about 1.5% lower, and some weakness for Wipro as well, down about 1% on the CEO moving out. So that's the long and short of what the index has done. But the move largely, I mean, aside of course what's happening in the three auto names, is what's happening at the broader end of the spectrum. Even if banks are underperforming, autos are really hitting it out of the park.
Autos are zooming. I'm wondering, Niraj, if you're going to hit 22,700 in the afternoon session. So let's wait and see what happens there. And very rightly so that Nifty auto up 2.5%. Nifty reality, we should pull that up as well as what's happening with mid cap and small cap indices, because those are the stories of this afternoon. And Nifty reality has also been having a pretty decent day, off its highs actually. Mid caps are flat, more or less. So you're seeing pockets of interest there. Nothing supreme happening in the Nifty small cap 250 either. But what are the stories today? Bandhan Bank. I have to pull up Bandhan Bank. We spoke with the management as well, and we'll play out an excerpt for you. But essentially, Mr. Ghosh, the founder and the face for the last several decades of Bandhan Bank, stepping down for a larger role. We don't know what that role is, who's going to come in next, what were the reasons for him to step down. So despite all the several interviews he's given, no clear answer on these key questions for the street. That's why you're seeing that stock about 5.5%, actually nearly 6% down today. Info Edge is the other sort of star of the day, and actually the stock of the day up over 9%. Obviously, great upgrades from brokerages, but even their numbers from their business updates are looking stellar, better than expected. Clearly, the IT employment pain is not showing for Info Edge, so that's one which we'll discuss in more detail ahead on the show as well. Cochin Shipyard is the other one I just want to point out. It's already been a stock which has seen a stellar run-up, but this news that the US Navy will be using Cochin Shipyard services to repair their ships has definitely had it buzzing. It's a stamp of approval, and how up about 6% even as we speak. The other one I think I'd pick up is Nykaa. Again, business updates, not bad at all things considered. 5.5-6% up for Nykaa today, and it's a stock which is moving after a while, so it's doing fairly well. But I think the other star this afternoon is Exide. Look at the moves on Exide. So one of their subsidiaries has tied up with Hyundai and Kia. They're going to be making EV batteries for them. So EV battery localization as part of that plan. They've got that deal. That was announced just a few hours ago, and that stock up 16%, 17% right now as we speak. So that's popping as well. But Niraj, the story is all auto ancillaries, everything around auto.
It is, isn't it? Just a bit of a vroom attached out there. And even if you have the likes of, I mean, you know, some other stocks like Godrej Properties or Gale or some others doing well, Tamanna is right. It's and Voltas, for example. But it's all about auto and auto ancillary in the session today. By the way, Amara Raja too has gained quite a bit. So need to keep that in mind. Hemen Kapadia of KR Choksey Stocks and Securities joins us right now with his thoughts. Hemen, good afternoon. Thanks for joining in. What's standing out in trade today? Banks are underperforming, unlike last week, but Reliance and Autos keeping the markets higher. You think we can make a dash to 22,700 and beyond?
A very good afternoon, Niraj. Thank you for having me on the show. It's always a pleasure. Yes, I think so, because 22,526, we spent 5 trading sessions last week, Niraj, trying to overcome 22,526. Intraday we did. a few times, but we never closed above it, just didn't close above it. Now today, first day of the week, we're on our way to do that. So yes, I think 22,800 is on the horizon this week. The VIX remains sub 12, which I think is quite important and a confidence giving measure as far as a bullish view is concerned. Bank Nifty 48,626, I believe, was the all-time high, Niraj. 48,636, sorry. So we are struggling because we are at historical highs. So either we take out 48,636 and begin the journey towards 49 and then 50, or if we don't do this in the next couple of sessions, it might fall under its own weight to consolidate a bit. The setup isn't bad. We remain bullish, and I believe we are going to go to 50, maybe not this month, maybe the next, as far as the Bank Nifty is concerned. But if we don't overcome this level in a couple of days, I think it's a problem. And the auto move that you spoke about, Niraj, 23rd March 2020 was when the post-COVID crash, when Nifty went to 7,500. The auto index was 4,500. We are at 22,000 and counting. It has been leading from the front for I don't know how long, Niraj, and still there doesn't seem to be any respite. We've seen a perpendicular rise, still no major overbought situations, still no reversals, no negative divergences. So I think the auto theme is going to play for some more time. Escorts Kubota is something which I believe hasn't performed. Should play catch.
Okay. What about trades for the afternoon, Hemen?
Okay, a couple of stocks which look interesting. Firstly, there's a buy call on Bharat Forge. Bharat Forge have been moving between 1100 and 1175 for the last 16 trading sessions. Today it will, I'm saying it will because I'm assuming it will close above that. It will close above the 55-day moving average. So buy on Bharat Forge at 1175, stop loss 1150, target 1225. It's on the cusp of a breakout from here. Mechanical indicators are supporting the move. Secondly, a buy call on Ramco Cement. Cement as a pack, I believe, would do well for a couple of months. In fact, ACC looks the best of the lot, but ACC is slightly corrected. Now, Ramco is making higher tops, higher bottoms. The mechanical indicators on the daily chart have turned positive. Last week, there was a big volume spike, and this was the highest volume in the last 10 months, Niraj. So I am assuming that stronger hands are bought. So buy at 850, stop loss 830, and target of 890 for Ramco Cements. Niraj.
Good afternoon, Hemen, and great to speak with you. Auto doing well, real estate doing well, but I want to come to specifics and let's start talking about what's happening in an Exide. Of course, a fundamental reason for that sharp zoom up, but what would you do with that stock right now?
A very good afternoon, Tamanna. Thank you for having me. Well, progressively higher tops and bottoms, Tamanna. I mean, there are no known resistance levels, so clear blue sky if it's looking at things from that point of view. And it's been a very constructive rise. So roughly from May of last year when we were at 130, sorry, May 22, not last year, 2 years before, every move has been followed by a time and price retracement. So it's been a very constructive rise. Now, after this, I am not sure where we are heading. If a Nifty stock goes up 16.5% in one day, I mean, that's humongous. So I would book just a little bit of profits. There's no question of shorting. Fresh longs, I wouldn't think so, but I believe we have a further upside in place because nothing yet, I mean, in technical, the trend is considered to be in motion unless evidence suggests otherwise. I don't see any evidence yet of it reversing, Tamanna.
You know, another stock that we're focusing on and is actually our stock of the day is InfoEdge. It's a big upgrade coming in for the company. Mihika joins in with the brokerage notes on it and why there is such excitement about InfoEdge. We're of course seeing it in the stock price, but fundamentally, what's the reason, Mihika?
Yes, so we have InfoEdge, intraday high of 9.9%. Stock is also up 20% the past month. It was mainly back on the Q4 numbers that the company did announce. Now, InfoEdge does own Naukri.com and 99 9 acres, but it was Naukri.com's numbers that surprised. Now we have Secure Info Edge, which is double upgraded to a buy at a target price of 6,650, which offers a 7% upside to the current price. Now they've the update indicated recruitment billings up 7% year on year versus much higher than the expectations, and recruitment business is likely bottomed out and could be an uptick. And they've also raised the core business estimates except the EBITDA numbers to rise to 8% in both FY25 and 26. And then we had Nomura, which also maintains a buy at a target of 6,210. Now recruitment billings were up 7%, way ahead than the brokerage estimates of only 3%. And they also noted that management states that there's the slowdown in IT hiring likely to have bottomed out given the peak utilization rates and see an uptick. And Nomura expects 15% year-on-year billings growth in FY25 versus a flattish number that it stated in FY24.
All right, so upgrades and a higher target. Nomura has maintained a buy with 6,210. Citi also with a double upgrade this morning, if I'm not mistaken. Hemen,
Yes.
quick take on Info Edge.
Okay. As far as Info Edge is concerned, Tamanna, I think there is a general cool off in IT. This stands out, looks solid. Once again, we are heading towards 64 and 6,800. Looks good. Outperformance as far as IT is concerned, I think it's going to continue.
Well, some serious move today on Info Edge, I must say. Some very, at the start of the trading day, it was there was a Voltas which was doing well. Some others were doing well. I think when you look at what, as the day has gone by, what has trended higher, Info Edge right up there, Gale right up there, because Gale, it may not have as much percentage gain for a large stock like Gale to actually start off flattish.
6% is not bad.
Not at all.
On a day
You're
like
spoiled.
Yeah, today
Info Edge.
because it's all rock and roll. So you're saying Gale 6%, not that great. It's actually quite fabulous.
Yeah, it's fabulous for that market cap to happen, and no news but for the Morgan Stanley note. But the fact that they are saying that it'll go on double, quite interesting. Actually, we can talk about that note on the other side of this break and also talk about the other big mover that we're talking about, which is autos. What's happening there? Manish Raj Singhania of FADA would be joining us on the other side to talk about that. Stay tuned.
autos this afternoon. I just want to pull up the Nifty auto and its components before I get to our special guest, where we're talking about what the scene is on ground. 2.5%. Of course, at the big winners today in the auto ancillary space in a sense, and what's pushing up that index honestly is in Exide. Aisha also doing fairly well. When a Maruti moves about 3.5-4%, it's a good day. M&M, TVS, everything is doing well except an MRF over there. Manish Raj Singhania joins us now. He is president of FADA, that's the Federation of Dealers Association. Mr. Singhania, good afternoon. And great to speak with you here on NDTV Profit. Let's begin by just talking about some of the data that you've put out. And correct me if I'm wrong, but the sense I get is that the growth in the passenger vehicle segment is actually not that great. It's modest at best. There is a bit of struggle there, and inventory levels are also inching up. Why then so much excitement on the ground? What are we not seeing here?
So, good afternoon. I think you're talking about the March figure or overall financial year?
I'm talking about the March figures. And the overall financial year is also not spectacular, is it?
So, please understand that auto industry, PV industry is on a very high platform. Many records were created and many records broken. In fact, the complete financial year figure, if you look at it, it is the ever highest PV retails registered in a financial year. So, surpassing that platform on such a high peak would be difficult. And overall growth has been anticipated. We had predicted a single-digit growth for PV industry. And the March figure, if you look at it, the slight dip that we see is not because of market was bad. Last year in the March month, the Navratras fell. And but this year, it is in April, that is tomorrow, the Navratras are starting. So auspicious days, obviously, customers tend to postpone their booking and like to buy vehicles on Muhurat days. So I think whatever lag that we are seeing in the month of March, it will be very well covered in the month of April. On the inventory front, yes, we are still at 45 days build-up stock. The comfort level for dealers, auto dealer community is at 30 days. Stocks have been corrected. We were at close to 4 months back at 60 days build-up stock. That has come down to 45 days. But an ideal demand or requirement of auto dealership would be a build-up stock of 30 days.
What is the kind of waiting period that we are seeing for newer models, Mr. Singhania? That will also give us a sense of demand sustainability.
So, waiting periods are mostly now over across OEMs. Very few variants are in waiting period now. And most of the vehicles are ex-stock available at the dealership. Moreover, you can also see discounts and schemes now being rolled out by OEMs as well as dealers for clearance of stock. So the kind of waiting periods we saw for two years and all that is a gone thing now. The supply chain and overall supply has been improved. The availability of models is very much at the dealership. If we are carrying 45 days paid up stock, that clearly shows that vehicles are adequately available at the dealerships.
What is it telling me about demand then? If you have 45 days of stock with you?
So demand, demand is overall the kind of inquiry level of booking and the dealerships are maintaining is still going on pretty good. In fact, in our survey also, 92% of the dealers are expecting a growth in this financial year. So there is a positivity. The traction for SUV segment continues. The expectation that entry level would be start delivering numbers this financial year, that is also there. I think overall, if a good monsoon, that's what is predicted. If it comes through, the rural market that has not been able to contribute to overall retail numbers of auto industry, if that starts delivering and the continuity of existing say of things, then we can expect a decent growth in next financial year too.
Give us a sense, Mr. Singhania, of the kind of growth we're seeing relatively in passenger vehicles, is it still SUV or pretending to be SUV kind of vehicles are king? Are we seeing two-wheelers speed up at a much better, pace? Give us a more detailed sort of overview.
So yes, in passenger vehicle, almost like 50% is now driven by SUV sales. And as I already quoted it, this is the all-time high figure of PV sale. And continuity of this retails can only be driven by a launch of new exciting products in the SUV segment, which is performing well. And we are still to see a lot of EV action happening in passenger car segment. We are just at 2.5% penetration, and all our OEMs are preparing their own range of models to excite this segment. Further, hybrid vehicles are on itself taking their creating attraction to the customer. So it's a mixed bag, but enough excitement on the overall landscape. And also the entry-level passenger car, which has been lagging behind, that totally depends on the recovery of rural economy, which has done pretty well in the H2 of last financial year. And if that continues with adequate government spend and good monsoon with good quality and quantity of crop, we can definitely expect that segment also contributing to overall retails. But definitely in two-wheeler space, we are still lagging behind. The entry level is still not doing well, not up to the mark, though it has shown definite improvements. But the premium motorcycles and premium vehicles continue to rule the roast. So there's still a huge potential there. I think in two-wheeler space, that segment also requires a lot of action on new model launches. The prices have gone up compared to BS4 vehicles by almost 50%. And entry level is stressed but recovering well. So good monsoon here can also be very critical. Plus EV penetration, if you look at it in March, went up from 5% in two-wheeler space, from 5% to 9.3%. Probably, discontinuation of FAME 2 subsidy or end of FAME 2 subsidy excited that segment. But all in two-wheeler space, the EV concept is more or less established. We need higher range model, longer range model, and a better price model to create enough excitement in this segment to create a getting a decent penetration across two-wheeler segment on a continuous basis.
Absolutely. I would say maybe the same for passenger vehicles as well. Better price models need to come in before you can improve penetration from 2% of the market.
So if you go to buy an ICE vehicle, you will be, pampered with the choices that are available in the market. But similarly, when you go to buy a EV vehicle, by EV PV, there are very few choices available in the market, and that too very expensive. So we are a price-sensitive market. We need to affordable vehicles and a bit of decent range that will drive the total EV market.
All the car makers, OEMs we speak to say it's coming. Let's see what Maruti, etc. have in store. Thank you so much, Mr. Singhania, for speaking with us today. Quick reminder, you're going to be hearing from Ather on their latest two-wheeler EV deal ahead on NDTV Profit, so stay tuned for that. But back to the stocks that are buzzing this afternoon as we're deliciously close to the 22,700 mark. I don't know if you're going to make it post-lunch.
I like that term.
Post-lunch, deliciously close. But what are the stocks that are buzzing on the back of trade today? Mahima joins us with more.
Right, Tamanna. So the first one that's buzzing in volumes is Exide Industry, where the volumes are 22 times its 30-day average, and it did touch an intraday high of almost 17%. Now, this is on the back of the corporate update that the company has come out with, that they're entering into a strategic investment with Hyundai and Kia for LFP batteries that they're going to produce. Well, So this will be a strategic cooperation in the India's EV market. Now the next stock that is buzzing in volumes is NRB Bearings. The stock has been down YTD by around 12%. Today it's buzzing in volumes around 9 times its 30-day average, and it did touch an intraday high of almost 10% in trade today. Now NRB Bearings is focusing on reducing their dependence on domestic sales, and it's restructuring the international business for itself, and it is also mitigating price pressure and yielding positive results. Now the other two stocks that are buzzing in volume are Voltas and Blue Star, both AC stocks. Well, Voltas came up with its business update where it achieved highest ever landmark of selling 2 million ACs for FY24, and it registered a volume growth of almost 72%. Now, two notes came in for Voltas today: Nomura, which maintains buy with a target price of 1450, and Citi with a target price of 1428. Now, both Voltas and Blue Star are buzzing in volumes because summers are coming in, and the IMD has predicted that we'll be seeing more than average heat days in the coming days. And lastly, there is PNC Infra, where volumes around 5.7 times its 30-day average. The intraday high, it did touch an intraday high of 9%, and this. Recently, PNC Infra made a settlement agreement with NHAI for settlement of certain dues that were the dues that were there, and the amount was around 117 crores. So these were the volume buzzers in trade today.
Okay, thanks a lot for that, Mahima. So that's some key volume buzzers in trade. Pankaj Pandey, Head of Research at ICICI, direct with us on the show as well. Pankaj, I'm going to take a leaf out of the stocks that Mahima highlighted. And before we talk about Exide in detail, a word on the cooling solution stocks. They've had a really good morning and afternoon today, but more importantly, a great quarter if Voltas's numbers are to be looked at. Would you go out and, what's your view on these stocks?
So hi, good afternoon, Niraj. So overall, see, a lot of these stocks performed according to seasonality, and I think last 1.5 years have not been great for them, largely because last year also inventory was built into the system, and somehow we didn't get the kind of overall temperatures to sort of push products. And as a result of that, system was riding high on inventory, but over a period of time, this inventory has been sort of cleared. This season is sort of a perfect recipe for a lot of these stocks to sort of do well. The temperatures are expected to stay high, and inventory is a little less in the system. So which is why we are seeing a sort of a turnaround in the fortune for some of these names. Structurally, within overall companies, I think AC as a segment looks quite good from the perspective that the penetration levels are still low, and there is a long runway for growth. In general, compared to, say, FMCG companies, I think consumer durable companies are quite capital efficient. Plus, for them, the growth lever is a lot more better. And also coming from the perspective that we have seen a good real estate demand in the last 1.5 years, and is expected to sort of sustain for next 2-3 years. I think a demand for consumer durable products, including ACs and other cooling products or other household products, is expected to be good. So we quite like this space. Largely, we have been liking some of the tier 1 names like Hemen. But in general, I think this space looks attractive. I think briefly, I think last week we had a technical call in most of these stocks.
Yeah. Pankaj, just want to get your take on a few of the counters which are completely buzzing. And we spoke earlier about Voltas, a Blue Star, all of these names. Anything that you like specifically over here and beyond these cooling stocks as well? Would you look at some of that working its way through a Varun Beverages, a United Breweries, or is just going to be about cooling solutions?
So like I highlighted, last week we had a technical call on some of these names, including Varun Beverages and including other companies like, say, Whirlpool or Voltas. So I think, like I said, inventory is largely sort of depleted in the system. Demand is looking good, and they haven't really done much in terms of last 1.5 years. So I think, given the fact that a bit of underperformance and very little room for other sort of segments to sort of do a catch-up, I think this entire space looks quite attractive to us. From a shorter-term perspective, I think For it to become structural, probably the real estate needs to sort of perform, and we need to see 1 or 2 more quarters of stable performance before they can be upgraded structurally. But I think all the ingredients are in place for these category of stocks to sort of do well.
Right. Another stock today which has all the ingredients in place is Exide in focus. The stock has surged today, up 17% right now. There's an MOU they've signed. One of their subsidiaries has actually signed with Hyundai and Kia. Puneet is joining us with all the details.
Yeah, thanks for that, Tamanna. So, as you rightly said, they've signed a MOU with the South Korean headquartered company Hyundai Motor Corp as well as Kia Corporation. Now, this is a strategic cooperation which is signed for India's EV landscape. This will also equip any future EVs which will be sold in India by these car makers with locally produced lithium-ion batteries from the Exide subsidiary. And they also say that just to get a landscape, in FY24, the year just ended, Hyundai sold roughly 1,800 electric vehicles, while Kia sold roughly 430 vehicles. Do note that Exide Energy Solution is a 100% subsidiary of Exide Industries, and in the month of March, they had invested roughly 75 crores in the company over 2 tranches. Over the last 2 years, when the subsidiary had been incorporated, the company has invested roughly 2,000 crores over the past 2 years and is expected to roughly invest the same amount in this financial year as well. So, the total investment would be roughly 4,000 crores by the end of FY25. And it's important to note that the company will also start the phase 1 production of roughly 6 gigawatts of battery by the end of this financial year. So 4 more quarters, that's what is expected. Now, previously, do know that they had set up this particular facility of a total cost of 6,000 crores. So going forward, the phase 1 will come on stream. Previously, they had a JV with Liklank SA also to set up this EV assembly manufacturing, which has now been taken over as a 100% stake. And finally, just getting a last brokerage view of ICICI Securities, they have a target price of roughly 400 on the company, with roughly 280 for the base business and giving a valuation of roughly 75 for new investments of the stakes they hold. So that's the stock has been buzzing a lot on the back of this. So is Amara Raja Batteries, but that's all we have on Exide right now. Back to you.
For that, Puneet, that excitement showing with Exide now zooming up. Pankaj, quick take on Exide and this MOU that they've tied up with.
So, auto ancillary space, we have been liking both these companies, Exide and Amaraja. Exide, we have a target price of 400. Amaraja, we have a target price of 900. Now, Exide, for example, our sense is that initially they are spending 4,000 crore for, total capex is 6,000 crore for 12 gigawatt kind of a capacity. Initially, 4,000 crore is what they are spending, and the numbers for which will start flowing from FY26 onwards. And I think the base business of lead acid batteries is probably going to grow at 12-13%. Previous 5 years, they've grown in single digits, so nothing much has happened to the stock. But what we understand is that this lithium-ion battery business is as remunerative or similar ROCs compared to the existing business. And on top of it, they are also sort of sitting on a good amount of valuation. So about 75 rupees is attributed to the life insurance stake, what they are still sort of holding. So I think this company is available at quite decent multiples of 14-15 times base business, and then you have other businesses also being there, LI stake. So we have been liking this company for quite some time, and I think a lot of juice is left. Numbers may not really get reflected till FY26, but I think for them, the lithium-ion battery business is going to start contributing from FY26 onwards. But good part is that it is going to be a similar ROS business.
All right. That's why the excitement on Exide. Just taking a very quick break over here, but we're right back with the latest from the F&O side of things. Stay tuned. Right, markets are doing well. Remember, we hit a lifetime high today on the Nifty, 22,656. Right now, almost 143 points up. What's moving? Auto companies are moving. Oil and gas is moving. These are some of the movers and shakers this afternoon. But let me go quickly across to Agam and see how positions are building out as Nifty has hit this lifetime high record as well. Agam.
Right, well, we have seen the Nifty edge higher, and this is especially considering the fact that it's largely consolidated around life highs over the course of the last few weeks. And today, we see a continuation of that up move in terms of trend. Of course, it's up around 0.6%. It's now, well, comfortably above the mark of 22,600. And, well, along with that, what is even more important is that in terms of open interest, we're looking at an 8% increase in OI towards what does, in fact, look like fresh longs at this moment. Now, the other, of course, defining part of the, the markets is that the Bank Nifty as well is advancing, and even though we haven't really seen a change in OI, where we are looking at that move, and perhaps if we should see the Bank Nifty close above 48,500, you never know, we could likely see life highs going forward into the next few sessions as well. Well, moving on in terms of the options market currently, as one might expect, since the Nifty has moved higher, there's a lot more writing around the 22,500 and 600 calls, or pardon me, puts. And of course, that also means that there's a little bit more, well, building up of a support around 22,400, 22,500. That will be very evident for you on your screen when you consider the overall options open interest. Let's pull that up as well. And there you have it. 22,500 is the 22,500 put is the one with the maximum OI, and of course on the higher end it's the 23,000. Not too far away from that level now, about 2% away. Keep an eye on that one. Let's talk about stocks then. And well, we do have a lot of longs in Exide, LIC Housing Finance, Info Edge. In fact, a very, very sharp moves for Info Edge as well as Exide, and of course Godrej Consumers is the other one. In terms of stocks which are seeing unwinding, short covering for Godrej Properties, Bharat Forge and DLF. I reckon all eyes will remain on the benchmarks at this point in time through the course of the week, even as we look and will make new life highs.
Okay, thanks a lot for that, Agam. So those are some stocks to watch out for in the session today. Keep those in mind. Hemen, one set of stocks which have done really well the whole of last week is pharmaceuticals. We saw Divi's end at January highs, Laurus end at 2024 highs in Friday's session. In Swift Labs, there were a couple of others, which Piramal Pharma, which had some very strong moves the whole of last week. Today too, Laurus is up 4.5, even Divi's is in the green. What do the charts suggest here?
Just digress, just 30 seconds, Niraj. The Nifty Pharma Index, if you just have a cursory glance, on Friday itself, we posted almost a fresh all-time high. It tested its earlier all-time high, Niraj. And this was 19,397 on 11th March. And on Friday, we were 19,395 on 5th April. So, I mean, 2 days we've had this level. So, and this is a 1,200 point range, Niraj, between 18,200 on the downside and 19,400 on the upside. So, frankly speaking, it's raining at the leash. We are on the verge of breaking out. We close about 19,400. We'll see a 1,000 to 1,200 point upside as far as the Nifty Pharma Index is concerned. Now, coming back to Divi's Labs that you specified, it's been on a tear. It's been a one-way move. And we are getting close to 38, 20, 40, which is been a bane of sorts. It's going to provide a lot of significant resistance. So I'd wait for a small period of consolidation. If you take a slightly bigger view, over the last 8 months, Niraj, Divi's Lab has moved between 3,300 on the downside, 40 in the 4050 on the upside, without any directional bias. But now the bias is turning positive. Not a short-term view, but if I were to take a medium-term view, Niraj, above 4050, it's going to make a break to 4,400 and more. So setup seems positive. Extreme short-term, we are walking into a virtual brick wall, a lot of resistance.
All right, another stock, and I think a story that we should focus on is what's happening with Bandhan Bank. Over the weekend, you had 2 CEOs exit news. hitting the headlines, and one of them was Bandhan Bank's Chandrasekhar Ghosh. Now, this one was important because he's the founder and really the face of the bank over a large period of time, right from day one. So he spoke to us and talked about the bank's return to normalcy and what changes had been incorporated. Just listen in.
2022 and 23, we are returning back to the position. When the 2022-23, we see that the very good development happened, but not up to the mark. And we have been decided we have need to change my IT platform, which is a CBS, core banking system. And I planned in the 2022-23 and 23-24, we are in a October, have been transformed. The total is a new core banking system from the old. By this time, last March, I recruited one of the executive director, he joined, and a new executive director, he joined in this March, and head of mortgage has joined the March, and the CFO has joined in the March. So I see that, and the business momentum has come in the last quarter is a fantastic and very smoothly transform of this, the IT system. New team have been developed and come on that. Then I feel that this tenure has been like to complete in a 9th of July. And then I have been decided 9th of July, I'll be like to retire. So that is the reason and the time and sequence I have been prepared from my plan, and accordingly I have been done it.
All right. So that was Mr. Ghosh's explanation of why he stepped down. But frankly, it's not something that the street accepted on face value. Clearly, 6.5% down. Pankaj, would you say that the sort of reaction to Bandhan is warranted?
I think Bandhan Bank has been sort of struggling a lot, especially when they had started with floods in Assam impacting their exposure. And subsequent to that, you have some of the other challenges in terms of credit cost remaining higher or collection efficiency being not so great. I think collection efficiency, though improved in the last quarter, the numbers were improving. But I think top level changes do impact the growth strategies. So I think I'm not surprised with the kind of a reaction what we have seen in Bandhan Bank. I think it is going to take some time for this bank to sort of stabilize and deliver stable returns.
Hemen, would you look at Bandhan Bank as a possible buy at these levels at all on the charts?
Well, frankly speaking, Tamanna, it's been a woeful, abysmal underperformer since it peaked at a high of 741.80 in August 2018. And nothing seems to have changed the trend. We've had a couple of promising moves which fizzled out. So no, I would say that nothing much to lose, but I don't see anything particularly positive at this point in time. Maybe about 210, things start looking better from a medium-term point of view. Currently, no. Yeah, once again, it's deeply oversold. I'm not sure it's going to go down much, but no, not compelling enough for a buy.
Yeah, okay, so not compelling enough, but what maybe is compelling is the oil and gas segment, especially the oil marketing segment. It's believed that Russian crude discounts have benefited Indian OMCs. Mehika joins in to break down the details. Mehika, what are we talking about today?
Yes, so since the conflict of Russia and Ukraine since 2022, India has become a significant buyer of Russian crude, and it proved beneficial for the OMCs in the 2022-2023 period, which was, evidenced by their supernormal gross marketing margins. However, despite the rising share, the benefits might have narrowed. Now, when we talk about Russia's share, Russia's share in the Indian total crude imports has risen from 1 to 2% prior to 35% in the 10 months of FY24. And when you look at the total import bill in the April 23 to Jan 24 period, while the total import bill has gone down 15.5% and key import and suppliers, the import bill has come down. For Russia, there's a 65% gain. But the benefit benefits has narrowed. Now, Kotak notes that the overall benefit has reduced by $2 per barrel in FY24. And when we compare India's average Russian crude import price to the Dubai benchmark, which is basically, it sets the base for most Indian crude imports. Now, discount enjoyed in FY23 was around 12.2 per barrel. However, in 9 months FY24, the average Russian crude import price stood at 75.9 per barrel versus the Dubai crude benchmark, which averaged at around 82.7, resulting in a 6.8 dollar per barrel discount. So there has been a decline in the discounts enjoyed by 5.5 per barrel. Now, when we talk about how much Russian crude do Indian refineries use, while we don't get the exact data, port-based data suggests that over 2/3 of the Russian oil imports arrive at Gujarat port. There's low Russian crude usage at Hindustan Petroleum's Mumbai refinery, around 8 to 10%, says Kotak, while for Bharat Petroleum, it goes around 12 to 15%. However, in Hindustan Petroleum's Vizag and Bharat Petroleum's Kochi refineries, they tend to have a share at 31 to 32%. But according to Kotak, independent refiners like Naira Energy, Mangalore Refinery and Petrochemicals, and Reliance Industries are likely to benefit more from the crude. And lastly, when we talk to the main top 3 oil marketing companies, when you compare them to the Dubai benchmark, the OMC's reported raw material costs have dipped, but it's not a significant decrease. Now, OMC crude costs in FY23 stood higher than the average that you saw between FY17 and 21, says Kotak. And the benefits stand the least for Hindustan Petroleum, whose costs have risen at $12 per barrel versus the average premium of $5 in from FY17 to 22. But Bharat Petroleum is the OMC where Kotak states stands to benefit the most from the Russian crude discounts. It's benefited the most from the crude usage in terms of raw materials have not increased significantly. And lastly, for Indian oil, the benefit stands not as high as Bharat Petroleum, but definitely more than Hindustan Petroleum.
Okay, so HPCL benefits the least, BPCL quite a bit. Okay, now this is a spotlight on OMCs, but Mika, while we have you, and I'm going to request the producer to put the Morgan Stanley note on GAIL behind Mika on the wall as well. What does that note say? Because that stock is trading at the day's highs now. Yes,
so it's maintained an overweight on GAIL and a target price of 254%, which is a 33% upside to the previous close. Now it expects GAIL's EBITDA as well as market cap to double in 2026. India's gas push, which is, and it expects, Morgan Stanley expects this to increase from 6% currently to 12% by 2030, and GAIL will benefit as a pipeline player and from an earnings perspective. Monetization of assets as well as the chemical upcycle to help doubling the EBITDA by FY27. Additionally, the GAIL has already invested $7 billion in the past decade to expand its pipeline, an additional $1 billion in its chemicals, which will help the EBITDA to double. They expect a 13% CAGR in the next 3 years. And they also believe that GAIL is currently capitalizing on the $10 billion investments, and they've noted multiple underappreciated areas that could drive an upside. This is mainly gas transmission volumes, stability in the gas marketing segment, pipeline tariffs that will come into play, and a mix of all of these would help will be key to re-rating.
Okay. Mika, thanks a lot for that. So that's oil and gas in focus, OMCs plus Gas Authority of India. Now, before I come to it, fundamentally, Hemen, I'm leaving out the OMCs. I want to talk about GAIL because it's had a trending day today. It's closing in as we speak at the day's highs. Do you think the charts suggest that they could do more?
Niraj, I think so, because GAIL was between 166, 196. It's consolidated, Niraj, for 336 and almost 9.5 weeks, Niraj, within this range, and now we've broken out. So it's not being, just floating on thin air. It's made a base, it's made a foundation. Now it's breaking out, and the volume today is highest in the last almost 28 trading sessions. So I'd say further upside. We are heading towards 226, the way I see it, Niraj.
And Pankaj, what about oil marketing companies?
Niraj, I think there are a couple of things which are working in favor for these companies. One, I think one needs to understand that most of these companies are looking to sort of change their business model towards the renewable side. beat a gas company like GAIL, because it is very much possible that 15 to 20% kind of a blending can happen in their pipelines with the existing natural gas. So obviously that makes the business more, gives a lot more longevity. I think something similar can happen with OMCs also, from the perspective that a lot of these petrol or fueling stations, I think a lot of them can tilt towards the renewable energy side and providing a sort of a longevity to business growth. So what it does is that from single-digit multiple, mid-single-digit multiple, you go to high single-digit kind of a multiple, or probably more. For gas company, I think what is good for a GAIL company like GAIL, what is good is that the gas prices have sort of stabilized. So both your key business verticals, one is the trading part, has started to sort of do better, and the transmission also is expected to sort of do better. So you are seeing a normalization of business for this company. And I think for oil marketing companies, I think at $75, some of these refiners were making 8 to 9 rupees per liter on the marketing side. But obviously, since the crude has sort of inched up, so that leg of the benefit is not so much. But the refining side continues to remain good thanks to cheaper Russian crude. But I think our order of preference within oil marketing companies would be, HPCL will be the least preferred, given the fact that for them they've got a higher marketing capacity compared to refining side. And IOC being the most beneficiary, so BPCL lies in between. But in general, I think if they're sort of changing their business model on the renewable energy side, I think the re-rating possibility is very much on the card. Some bit of it has happened, and it is possible to sort of get a further re-rating is possible. I think crude oil prices down or higher, or gas prices sort of normalizing, I think we'll have a limited benefit in the near to medium term. But re-rating will happen only when the renewable energy side or the green side of the business takes shape.
All right. Now, just shifting focus a bit, minutes before the close, is our series of How Rich Is Your Candidate? Remember, we're going into poll season. And as a part of their disclosures, candidates have to tell the public what their investments look like. So today we're talking about what Rajiv Chandrasekhar's portfolio looks like. Alex is joining us for more.
Right, so the spotlight today is on Rajiv Chandrasekhar's portfolio, the Minister of State for MEITY and the candidate from Thiruvananthapuram. Let's take a look at how his portfolio looks. There's movable assets of as much as 13.7 crore rupees, immovable assets of about 19.7 crore rupees. And it's interesting, there are bank loans that he has to repay of 19.4 crore rupees, but he's listed this as under dispute, and he's got physical cash of 52,761 rupees. Now, it turns out that he's got Tata Steel, that's the only listed stock that he holds, to the extent of 2.14 lakh rupees, and he's got several unlisted shares that amount to about 3.9 crore rupees. Now, his bets on mutual funds have done quite well. In fact, so let's move on to the next one, because this is just a Reliance Yield Maximizer. He's invested in the HDFC Midcap Opportunities Fund, which has seen a near 5-fold increase over the course of his holding period. And he's also got the HDFC Equity Savings Fund, which has grown quite substantially, currently stands at 2.18 crore rupees. What else does he have? He's got bank deposits, which include savings bank deposits of over 10 crore rupees, jewelry that is currently valued at over 3 crore rupees, and non-agricultural land, which is part of his immovable property, which accounts for about 14.4 crore rupees. He's also got tax-free bonds that are split between HUDCO as well as IRFC and NHAI to the tune of 4.44 crore rupees, and a superannuation fund to the extent of 85.4 lakh rupees. Now, finally, if you look at the net investment value that he has disclosed, it's a loss of 45.7 crore rupees, and that's largely on account of losses that he has disclosed in a couple of his partnership firms, Blue Mountain Estates as well as Waterfall Estates, of over 60 crore rupees, and that is accounting for this.
All right, thank you for that, Alex. This is really interesting, and I think, Niraj, what strikes me about this series also is that how a lot of our netas have invested in mutual funds and in stocks. So sensible investments are also happening. Everyone is doing it, including the politicians.
Yeah, only thing is Alex had a question the last time that he did one of the portfolios that why doesn't this guy hire an advisor? Because he had some 25 funds in his portfolio. Like, come on, I mean, be real about it. So that was the other interesting piece. But yeah, actually, well, just before we start though, wrapping up the markets, Hemen, can we ask you, we're very close to market close, your top closing strategy?
A BTST on SRF, Niraj. We're at 2613. A 15 rupee stop loss, 30 rupee target. BTST on SRF.
Pankaj, any last calls on, what would be on top of your list for tomorrow?
Tomorrow is difficult, but what we are sort of liking is some of the names in the hospital tier 2 names because Q4 is a relatively better quarter like Q3 because Q3 because of festive season has limited elective surgeries. Then we are liking the tier 2 cement companies. I think there's a significant valuation gap between large caps and smaller or mid cap names. And we're liking the entire infrastructure space because our sense is that post-elections, some of these stocks will have a lot more decent and consistent order inflows.
Got it. Okay. Gentlemen, thank you both of you for joining in. Really appreciate your time this afternoon and giving us your thoughts. But 1 minute left to market to close. I'll very quickly get the heat map up on the screen. Remember, let's get the levels up here. I mean, the individual stocks also important, but the market-wide, I think very, very good day, even if we haven't touched 22,700. But look at the gains in autos. And by the way, I must say, NTPC suddenly, out of the blue, is now come up in the top 5 performers list. So the last few minutes have been very strong for NTPC. And of course, JSW Steel as well has had a really good one today after they declared the numbers. Adani Ports, the selling, the couple of blocks that have happened, the selling seems to be over. So don't be surprised if Adani Ports tomorrow has a completely different look than what it's having yesterday and today. And Nestle is down today. But Tamanna, the day belongs to autos, though I dare say NTPC, the way it's moved in the last half an hour, seems to be taking the cake from amongst the large cap names.
Yeah, NTPC definitely an exciting move, but overall I think autos will still continue to be. What's interesting is that Wipro at the end of it, only about 1% down with that shake-up, but not so much for Bandhan Bank, which got punished.
Yeah.
So it tells me how the street is, seeing those two particular announcements, which on the face of it were similar. Let's look at how the mid caps and small caps have ended. And actually today was the day for the Nifty and the Sensex. No real action on the broader ends of the market, except for specific pops, I would say. Auto, Realty, Exide, the big story. Cooling Solutions, Voltas, definitely. Blue Star as well did fairly well at the end of it. And Info Edge, stock that Niraj was talking about this morning with fantastic numbers. So I would say those are some of the winners definitely of the day. It's a market which more than broadly doing well has been popped up by some big names today, isn't it, Niraj?
Yeah, most certainly. I mean, that sums it up really. That's how it is. Reliance, can't forget the big boy participating today in terms of weightage. But you know what? We'll talk about some of these tomorrow on the morning show as well, along with the stocks that come up for news. So do try and tune in for that as well. But for now, from Tamanna and me and the team that put this show together, thanks so much for watching.